Welcome to the Abundant Accountant Podcast. This is where accounting professionals just like you learn all the ways to grow their firm, sharpen their skills, and have consistent increasing sales. I cover topics such as detaching from the emotional side of the sale, having paradigm shifts in the most important part of your business, which is the nucleus of your accounting firm, sales, and how to see an objection really as an asset and stop giving away your time for free for those that don't deserve it, so you can actually get paid your value and your worth and grow your top line revenue. You'll learn tips, sales strategies, as well as hear from personal interviews from successful accounting professionals. This podcast will show you exactly the blueprint on how to create the firm and life of your dreams full of abundance. Welcome to the Abundant Accountant Podcast. Today, we have a very special guest. Our special guest has devoted her career to enhancing the expertise of accounting professionals while helping small businesses minimize their tax burden. She emphasizes on proactive tax planning strategies, enabling small companies to leverage the tax law in the same way that large corporations does. Our special guest also founded the American Institute of Certified Tax Planners in 2009 to share her approach with other accounting professionals across the country. It's a nonprofit organization that trains and certifies tax experts in proactive tax planning, with over 1,200 certified tax coaches, planners, and strategists across the nation. But before we welcome our special guest to the show, if you're an accounting, tax, or bookkeeping firm owner and you want to stop trading time for dollars and let go of overly demanding clients and get paid based on your value and worth while still massively boosting your revenue, here's what I've got for you. Here at The Abundant Accountant, I show you a system to fill your firm with ideal clients who value your time so you can catapult your firm to the next level and work the hours you want to work, while still having plenty of free time every week for yourself and your family. And not only that, I'm going to show you how to do all of this in a way that feels simple, effortless, and automatic. If you want me to show you how to do this, go to theabundantcall.com right now to book a call with me and my team. Once again, that's theabundantcall.com. And now let's welcome our special guest, Dominique Molina, to the show. Welcome, Dominique, to the show.
Oh, thanks for having me back, Michelle.
Thank you so much for being back with us here on the Abundant Accountant Podcast. It's always amazing to have you. And I know all of the listeners, I get notes about how much they learn from you. So, but you might have someone here for their first time. So why don't we share, Dominique, who you are and what you do? Just real quick, 30 seconds. I always think it's best to hear it directly from the source.
Yeah, sounds good. So my name's Dominique Molina. I run a company from San Diego, California called the American Institute of Certified Tax Planners. And I'm a CPA and longtime tax practitioner, longer than I care to share with the audience. But I also do a lot of volunteer work for the Institute where I instruct and write content and books and course materials to help train tax professionals in the expertise of advanced tax reduction.
Awesome. Well, that is a lot that you do for the community. And, I think one of the things we're going to talk about today is, how do you sell a tax plan when in the past, most firm owners and professionals have done the work for free? You just never charge for it. And how do we sell that and, not offer like quote unquote their ideas, but offer the plan and how to do that. So I'm very excited to dive into that today. So what have you seen in working with all the CPAs and EAs that come through the Institute when, they don't know how to sell a tax plan, when in the past they just, it didn't work for them, or they just said, oh, I'll just do it for free. How have you seen this transition and make the change for them?
Yeah, I think there's a few things I want to share. The first is that a lot of this came from my own experience in trying to convert my practice from a reactive work style in focusing primarily on tax return filing and compliance and consulting work,
Mm-hmm.
and trying to shift that focus over to planning and where I could really make not only a good living doing it, but an outstanding amount of money doing it. And that really made a huge difference in my practice. And I've seen it do the same for thousands of other tax professionals. But one of the primary things that I see that can go awry or can go wrong, and it leaves people scratching their head and maybe even saying, well, I've tried that and it didn't work for me. But it has to do with the approach. And so, really breaking down the mechanics of the process, and that makes it a little bit easier to identify where there's things you can change up and experiment. It's all about experimenting, trying things, and measuring the results to see if what you're doing that's different kind of moves the needle in a different direction for you. So I'm going to share some common mistakes that I see folks make, but ultimately, it's about you being authentically who you are and not trying to be a clone of me or of anybody else maybe that you've met that you think has great skills. But it takes practice and really being true to yourself and learning about how to make that conversion.
Yeah, for sure. And I think, you know, just because it didn't work in the past for someone, I think the other thing too is that you just can't keep, doing the same thing, because doing the same thing, if it didn't work, is the definition of insanity. And I think a lot of times from the clients that I've worked with and learning how to sell the tax plan when in the past it didn't work for you, we have to gain that confidence. And a lot of that, just like you said, you have to experiment, but then also measure the results and change quickly instead of just throw your hands up and give up. But what I'm curious about too, before we dive into how we're going to make these changes and if it didn't work for someone in the past, what they can do to, have this new approach. But how much revenue on average is a firm owner missing out on because we're not selling the tax plans, or you're offering these ideas and not a plan and not charging for it? I feel like there's so much money being left on the table. And when we don't offer the plan for the firm owners that are doing these for their clients, the clients, paying a lot more than probably they need to the government.
Oh, absolutely. There's two people that benefit from this where it's a win-win situation. I think the only person that loses is the IRS. But that's a different story, right? And that's not my responsibility as long as we follow the law.
Mm-hmm.
But I think it's important to identify first of all, what is tax planning in terms of the revenue that I see folks make? When you make this shift and you start making tax planning a significant part of your firm, it's not uncommon for us to see people generating 25 to 30% of their total firm revenue strictly from tax planning. In terms of dollars and cents, we can measure and see that from the time that they get licensed as a certified tax planner, tax professionals are making an additional $156,000 on average in their business of new revenue in just a 12-month period of time.
Wow.
So when we look at that first year, and then over a 3-year period of time, what the numbers are telling us is that people have made over $1 million in additional income to the firm as a result of shifting your model this way. Now, when we look at, and those numbers are great, no doubt, they're exciting and nothing to, downplay, I think, in
Right.
terms of your pride and what you've been able to accomplish. But at the same time, we have to look at what are our clients leaving on the table. And so
Right.
in that same period of time where we see a tax professional in the first 12 months of getting certified, we see them making an additional $156,000 in revenue. Their clients have an additional $600,000 of cash available to them as a result of this work. And so while it's great to be focused about your own business, it's important to also step back and see the service that you're providing to people. And that is meaningful change. When I can sit down with a small business owner and uncover close to 600,000 or over 600,000 of money that they were previously paying over that they do not have to pay in real time, meaning right now they have access to that money. That makes a big difference in the business. It helps them accomplish goals. It helps them live happier and more successful lives. And that is one of the key components to making this work, right? Is if we're going to charge a substantial amount for this work, then the savings better be substantial. Mm-hmm. So you better know how, have the skills and how to do that. And what we found is 80% of practicing tax accountants out there just don't know. And it's not their fault. They just weren't trained to do this work. And so you have to be able to deliver substantial savings, but also it's key that those recommendations are substantiated. They're substantiated with your numerical proof, with your legal proof, citations of tax code and court cases, so that you demonstrate you understand what you're doing and you're not recommending something that is too good to be true or beyond the bounds of the law.
Yeah, for sure. And like you said, 80% of tax professionals don't know how to do this work. So it's a huge opportunity to capture, this opportunity to help your clients, since most people are either not doing it from a lack of knowledge or they've tried to sell a tax plan in the past, but it didn't work for them. So how do we reverse the history when someone's tried to sell a tax plan, they've attempted to do this, and it didn't work out for them?
Yeah, I think it's important to identify exactly what is tax planning. What is tax planning? Tax planning is not what people believe it is. It goes far beyond sticking money in a retirement account or going out and buying a piece of equipment in December every year to get the bonus depreciation, right? Mm-hmm. But yet that's what we've been trained to do. And again, it's not our fault. Tax reduction is not part of the minimum education requirements to go into this practice. Now, whether it should be is for other people to determine. I don't have time to do that. I'll leave that up to somebody else. But the key is that understanding that first of all, and then knowing where you can get educated is key. What is tax planning? So we know what it's not. It's not deferring. That's not a permanent tax reduction. That's just a deferral. We're saying, okay, you save money today, but you're going to have to pay tax sometime when you take it out. And oftentimes you might be taking it out when you're paying higher tax rates. So does that make a whole lot of sense? Probably not. Mm-hmm. So we know that's not it. We also know that in traditional firms, people will call tax projection work tax planning. So they'll refer to that where we're annualizing income, we're predicting what we believe the tax will be at the end of the year, and then we let them know what the quarterly payment should be or what their bonuses should be, for example. That's not planning because, again, we're not offering advice to reduce tax. We're just simply letting them know. I see that more as cash flow planning, right?
Right.
And then back on the subject of retirement, a lot of times people think that tax planning is retirement planning. And we see this a lot with financial advisors who do a great job when somebody's approaching retirement or they're in retirement. They help reduce that person's taxes in retirement by understanding where they should be drawing. Should they be drawing from taxable versus non-taxable accounts? And how can they organize their finances in a way that leads to less tax later? Again, that's great. And it's a very valuable service, but more difficult to sell, certainly if my substantial tax savings comes 20 years from now.
Yeah.
When I can say to somebody, like last week, for example,
Hmm.
you are going to get refunds of $400,000 and you're going to save $250,000 per year every single year going forward after that. That is immediate, it's tangible results, it's substantial. And then, of course, the work we do for the plan itself is substantiated.
And it goes into the future.
Yes,
Hmm.
absolutely. And so I think because there's so many misconceptions, if you're like me and you're a dinosaur and you've been in this business for a long time, perhaps you've seen it all. You've seen it all. You've seen every kind of case cross your desk. You've listened to thousands of hours of CPE. And so at a certain point in the game, you like to pride yourself on what you know how to do. And so oftentimes it's difficult for tax professionals to admit that there's something they actually haven't been exposed to throughout their
Yeah.
career. And so as a result, what I see a lot of tax pros doing, especially older experienced tax pros, is they say, bah, that's a scam. That's not true. I've never seen anything like that. And if people are promising those kinds of savings, it's got to be a scam. It's snake oil. It's snake oil. No, that's legitimately what it was. And it is all in the presentation. And again, focusing on that value that you're bringing. That's why people will pay substantial amounts of money, because what they get in exchange for that money is substantial and they can feel it and see it and touch it and experience it. And that's a key to all of this.
Yeah, no, it really is. So once we understand and now we know what tax planning is, and you are clear, it's not, tax projections, financial forecasting, it's not a deferral, they're not buying the equipment, and they come to you and learn how to deliver these substantial savings, then they're going to be part of the 20% of the population of tax accountants and professionals that understand and know how to do tax planning. So they got the know how and they got the skills. How would you recommend one go, reverse this history and try to sell tax plans again when in the past it didn't work? And I think a lot of times too, and maybe you can speak on it, like what's the difference between offering just ideas and offering an actual plan?
Yeah, that is a really important distinction, Michelle. And I know you know this is true as well because you teach this. You not only teach
Mhm.
this through the Institute itself, but you teach this with your coaching clients as well. I think again, it goes back to the work style. We've been trained to work reactively with people. And so most often what we see happen is, people come to us at the end of the year or afterwards to do the reporting, right? We're recording what happened in the previous year. And then we frantically look around and we say, what are the things we can do? Oh my gosh, to shrink this bill because I know this client is going to be really irritated with me that they owe money.
Mhm.
And first of all, yes, that's true. They do get irritated with us. Is it well placed frustration? No, but they don't know that. And so what we do then we try to look for the tools and the strategies that number one can be used. Well, what strategies can be used post year end? Not very many. Your idea box just shrunk down to about 2 to 3. And we start with over 1,200. Okay. Um, and so if I come to them and I say something like one of the 2 ideas or 3 ideas that can be done, hey, gosh, maybe we make a late S election on your LLC, and we're going to save you some self-employment tax this year, and your tax is going to go down a whole lot, and that's just going to be $5,000, please. So, a couple of key points about this example. Number one, I don't have a plan. What I have is an idea. And to your point, Michelle, there's a distinction there. An
Yeah.
idea isn't a plan. A plan actually goes into analysis to identify, is this right for the person? How much does it save? When does it save? Is it smart to do this now versus later? Why is it important now? What happens in the future? What's happened in the past? That's a plan. Writing it all down and documenting the steps and documenting the disclosures that must be shared with a client when we recommend that they make an entity change, for example. And so when I share this idea with somebody, it's not a plan. So if I say that's $5,000, what I've just done is said, hey, client, I'm the Wizard of Oz, and I've got an idea for you that's going to get you back to Kansas. Here's this balloon over here, and you're going to go in the hot air balloon. That's $5,000, please. When I just told them about the balloon, could they seek a balloon somewhere else? Probably. Could they get an S corporation somewhere else for less than $5,000? 100%. So let's not kid ourselves. The price point is definitely going to be a factor, and it's going to be a shocking to someone. They need to feel and see what they're getting for the $5,000. So we say, we're going to save some tax. Okay, how much tax? Let's say you crunch the numbers and you say your tax is going to go down by $11,394 this year. Okay, still not a plan. We still haven't done all the rest of the work that I listed. And so there's we haven't conveyed in that conversation that there is work still to be done. And here's the problem. When somebody thinks I've already done the work, now it's a take it or leave it situation. They already know what to do. They don't need to pay me for that idea. $5,000 is a lot of money, and human nature is I want to go where I can get the best deal. That's just shoppers, right? So it's all in the presentation. If, on the other hand, think about this like any other engagement you might offer in your practice. Let's say, for example, you're doing a tax return. It's for a business. You come down to fill in the balance sheet and you realize that retained earnings does not tie out to last year's ending retained earnings. What do you do? And for some people, the answer is, well, I go in and I dig around and I fix it. I don't like it. I don't want to do that, but that's how I handle it. Some people might go down that road. They start and then they go, oh my gosh, this is impossible. I can't find out what the problem is. This thing is a mess. Now I'm going to put it back to the client. They call the client. They say, hey, I can't proceed unless you do X, Y, and Z. I can do it for you. Here's how much it is. Do you want me to do it? Yes or no? Or, hey, you got to take this somewhere else and get this work done before I can finish your tax return. So we usually do one of those three things. Tax planning is no different. We're stopping our current engagement with them if we have one in process. We're bringing to their attention that there's additional work that needs to be done. And P.S., the work is not forming an S corporation. The work is exploring what all they can benefit from any of one of more than 1,200 strategies. What tax credits are they missing out on? What income shifting or expense shifting strategies are they missing out on? What income recharacterization strategies could they benefit from? Et cetera, et cetera. And then you come together with a description of an additional engagement that you would like to provide for them, the result of which is they're going to save $11,349 per year. And it's $5,000. Do they want you to do the work or not?
And that's offering a plan versus an idea.
Yes, it's not one idea. A plan is not an idea, and a plan is not the same thing as implementation. Again, the value's not informing the S corp. I can go on to LegalZoom right now, and for about $350, I can make an S election. It's not going to cost somebody $5,000, but the value comes from the expertise in looking at every available break that can be offered, analyzing it, discerning, using judgment to find out what do people qualify for, what do they need to shift so that they can qualify if they currently don't, and then putting that all together for them in a comprehensive written plan so that you've got documentation of what you discussed. You're fully disclosing the good and the bad with every tax strategy we're employing. And then you move on to actually implement the plan.
Big, big distinctions.
And I think, again, it's not our fault that we've been trained to work reactively. And so what we're trying to do now is take the way we've been trained, take that know-how, that process, take that process, and then make it fit into something that's not a reactive type of engagement. Planning is proactive. It's from here forward. So I cannot then present this offer using a reactive method if I'm going to try to sell them proactive work. Sometimes it works, but I have to say it's very unusual for that to work.
Are there any other reasons that you see as well, because people might have just offered their ideas before on, they've tried to sell these tax plans, it didn't work, and other reasons why it didn't work? Because I think so many times we try to do things and then we just stop in our tracks when one thing doesn't work. But I think, like you're sharing, maybe it wasn't working because you were just selling an idea versus doing this preventative comprehensive plan from here forward and doing, more of the things that seem impossible or too good to be true, but really going deep on the technical side. But any other reasons why it might not have worked for someone in addition to having just this idea?
I think sometimes we live where we feel most comfortable.
Yep.
And I'm your typical accountant, Michelle. You've told me that many times.
Yeah.
As we struggle sometimes to understand one another because our brains work differently, right? And I think sometimes I choose to live in the details of things because that's where I feel most comfortable. I'm an introvert, and so I would much rather surround myself with facts than with people. And so when I dive into the details right away, that's a safe space for me. And the other thing is that sometimes we stay stuck in the details because we're trying to demonstrate that we know what we're talking about. We're trying to build trust and confidence in what we know how to do to put the client's mind at ease. And so that might look like to someone, oh, yes, we're going to make an S election, but we're going to follow the late S election procedures under Rev Proc, blah, blah, blah. And we're going to file a form 2553 and we're going to date it this date and we're going to come up with this reason. And this is how it meets the revenue procedure requirements. And that's what's going to allow us to get this through. Again, what I've just done is I've presented myself, as if I already know the answer, which is dangerous for a couple of reasons. Two, I've just told them a breakdown of exactly what to go and do. And that's scary because I really haven't done the work appropriate to identify if that's ideal for them. I haven't presented the pros and the cons. I haven't said, hey, gosh, you didn't take payroll all year last year. We're going to go ahead and do this late S election with a big fat zero on the officer's compensation line. See how I'm doing this, Michelle? I just love the details.
I know. I'm so lost.
Yeah. And so we, A, lose our clients. We, B, give them a roadmap of, because we've presented this as if we already know what to do. And then they can just go out and do it for less, because let's not kid ourselves. We start getting into these prices, 10, 20, 50, $80,000 for a single plan. That's about, 10 to 20 hours worth of work, for example. They're shocked by the price. Absolutely. Now, let's say you charge $80,000, you're saving somebody over $500,000 a year. That's a pretty good deal to me that they get that back in their bank account every single year. But we have to also meet them where they are. They're still going to have sticker shock about that price. And so if I just go in and rattle off all this stuff, what I've done is I make it seem like it's no big deal.
Mm.
It's no big deal. You just go in and you file these forms. I can't tell you how many times I've actually used those words. They've come out of my mouth,
That's no
Michelle.
big deal.
Oh, it's no big deal. You know why? Because I don't like to see people in pain. So I want to save them. And so when they realize that they're throwing away so much money that they don't need to, they start to get discouraged. And I go, oh, it's okay. It's no big deal. We're
Hmm.
just going to file this and we can get it all fixed up for you.
Yeah.
But what I'm doing that is in that situation is I'm discounting the value of what I do. Suddenly, nobody cares about the $400,000 that their bank account will be bigger by this year and every year going forward. But I've made it seem like in their mind, I'm charging an outrageous fee because if it's no big deal, why do I need to charge that kind of money?
Yeah. And I think the biggest thing that you just said, and I think the most important thing from my world and a sales perspective and delivering values, when we discount our value of what we do, it's not seen as important. It's not, and I think a lot of times too, if you've tried to sell tax plans and it hasn't worked in the past, that's the number one reason why. You say it's no big deal, you minimize and justify all of the reasons, and then you think the idea is the solution when really the plan is the solution. And it's a downward spiral from there. And we just keep moving backwards instead of moving ahead.
Right. I've heard it mentioned too, oh, that's no big deal. You're hiring your kids to work on the business. You're improving the home office deduction by a little bit. No big deal. But again, that's not tax planning. I don't need to pay somebody 5,000 bucks to hear those types of ideas. Those are on Google, right? But as you get into real business tax reduction, it requires analysis. It requires judgment. It requires discerning, what works and that knowledge of the layers of the tax law, the knowledge that, hey, if I'm going to change from an LLC to an S Corp, I might lose the deduction of my fringe benefits. Do I want to do that? Well, I don't know. Let me see what that does to the number. And so again, I think we can discount our own value because we walk into that meeting thinking it's no big deal. You just form an S Corp. It's no big deal. You just do a home office. No big deal. You just hire your kids. Now, if that's what you think tax planning is, then you're right. That isn't a big deal. And so you need to be able to productize your service a bit. It's the combination of the strategies that work, it's the analysis that work, and that's what we're asking them if they want to hire us to do, is that type of work.
Are there any other reasons that you've seen on why, you know, selling a tax plan that hasn't worked in the past didn't work? And I think you had a client example actually that we were chatting about that I'd love to hear about. And I'm sure a listener does too.
Yeah, I think we get weird when it comes to price.
Yep.
And and it is uncomfortable. I'm not going to try to snow anybody that's listening to this right now. If you've never done this before, when you've never done this before, it is uncomfortable. It is uncomfortable if you're used to charging $1,000, $2,500, $3,000 for a tax return to then come in and say this plan that will only take you about 10 hours of work to come in and charge $5,000. But it's nothing to be ashamed about, again, because it's all about what you know how to do. It's about the results. And so again, we kind of discount our own value. And so then when we come in to talk about the price, of course we're weird. We're weird because we don't really believe it ourselves. And so we're not really being authentic in that conversation. If I'm thinking to myself, oh God, oh God, oh God, oh God, I got to say it's $5,000. I don't really think it's worth 5,000. I don't know. I don't think they're going to say yes. I don't think they're going to say yes. I don't think they're going to say yes. And then I go, yeah, it's $5,000. I mean, is this something you want to do? You don't want to
Right.
do it, do you?
You talk yourself out of it.
Yeah. So you have to really start by believing it yourself. And that's a difficult change to make because it takes practice and it takes experience to teach yourself that lesson. And so my advice there is surround yourself with people, with peers, with friends, with other people who don't know anything about tax. Share with them what you're doing. Share with them, hey, I'm going to be able to cut $45,000 off of their quarterly estimated payments in 2024. Do you think that's worth $5,000? Let them tell you. We can't ask you because we're too in it to see the value. We just are too tainted. So ask others and borrow from other people's experience. Connect up with other planners. There's lots of great communities for doing that in, but it's really, really hard to go out and feel confident about what you're doing. If, for example, you're a member of a social media group that just last night posted a message that said, throughout my career, I've lost clients who have gone to other firms because they can save people money on taxes, but it's always sketchy. The stuff they talk about through their marketing is not earth-shattering strategies. So it's a bunch of bunk. Well, if that's who you're surrounding yourself with, that's not going to help your confidence. And I don't mean to fool yourself either. I mean people who are actively pursuing this, who are trying to better themselves, who are trying to grow and develop professionally as they understand the complexities of the tax code, because this is not an easy thing.
Yeah, and I don't think it's something you want to do on your own. There's a lot of intricacies in doing everything on the preventative side and having that community, like you said, and reaching out to other groups to be a part of, because doing it alone is the thing that won't get you the results. It'll keep doing the thing that you've been doing. And in order to reverse your history, you have to step out of your comfort zone and try something new and offer plans, not ideas, and change, like you said, the mindset part about it.
Now, when I started this work almost 20 years ago, Michelle, with my own practice, converting from a reactive model to proactive, there really was not a lot of support in terms of value pricing and a generalized acceptance of that principle. And it's a lot different today. And so I did feel like I was in a vacuum. And so what I had to do, because it's scary, I was terrified. My knees were shaking the first time I ever quoted a high fee. And guess what my high fee was at the time? It's like $3,500.
Oh, I thought it was like 1,000.
But I was still scared, right? I was still terrified because it just wasn't being done. And this is 20 years ago. So, 3,500 back then, inflation, what is that? 3.5 million in today's dollars.
Wow.
And so I had to look at other communities, other industries that are using these similar types of tactics and strategies to highlight their value. You look at something like concierge medicine, for example, is a really good example. It's where you're sort of busting out of the conventional, traditional ways of doing things, and you're able to be more successful yourself, but at the heart of that is doing really, really good work for your clients. And there's no reason you can't have both. And so I'm really happy that we've been accepting this now more as we have more and more younger thinkers that come in and say, gosh, maybe there is a better way to go about how we're running these businesses so that we can be freed up to do a lot more for our clients because they deserve it.
Yeah, they deserve it, and so do you. You can work so much smarter instead of harder. So, and there's so many ways to go about it. Dominique, thank you so much for sharing your insights with us today. Is there anything else that you wanted to share on, if someone tried to sell tax plans in the past and it didn't work for them, what else they could try, or something else that came up for you just now that we didn't talk about yet?
Yes, and I'm going to share something that you taught me, Michelle. And I know you use this with your coaching clients and those that you work with here at the Institute. And that is prepare Prepare for meeting to have that discussion. We're used to working in a reactive model where every minute of every day is packed. And oftentimes we're running from one meeting into another, and we're now looking at the file and glancing, go, okay, what am I doing? Yeah, okay, yeah, $5,000. And,
Yeah.
this takes practice and it takes intention. And what you've taught me is that intention and really giving yourself the room and the space and the time to contemplate, what am I really doing here? What's my intention for this meeting? What do I want to make sure that I clearly communicate to them so that I consider it a successful meeting? Because making a change like this is not just going to happen because you rattled off something off the top of your head. But if you sit down and you really prepare for that, and you maybe even script out what you're going to say, and you practice what you're going to say, you practice it with your dog, you practice it with your mom. Your mom's never going to tell you you did a terrible job, you know. And if she does, then maybe you should go no contact with your mom. But practice what is important to you. And I'm telling you, this can make such a big difference in your life that it should be important to you, if for no other reason than just to do right by your clients. So put in that effort, put in that space, and give yourself the time that you need to treat this with the level of seriousness that it really deserves.
Yeah, I am a big proponent and highly prepare. I mean, even when I talk about meeting a client to sell a tax plan or go to a sales meeting for a bookkeeping or accounting package or anything like that, we have to prepare. And sometimes it's an hour, and sometimes you might need two, and sometimes you might need three, depending on the type of plan you're about to sell. Because again, you're not just coming with an idea, you're coming with a well thought out plan. So not only do you have to prepare in advance to put together a plan that you want to sell, but you actually have to put together the part that you need to say, like you said, script it out or figure out the sales conversation side of it and prepare all around instead of just, going in your old reactive model from meeting to meeting, piled up papers, feeling overwhelmed and overworked and underpaid from all the low client value stuff that's sitting in front of you right now when you know that you want to be doing something different. But this takes intention. And I think a lot of times, many firm owners that I've seen, we just are going about our day versus having clear intention. And this is how you can take back your control of your life and your firm and what you do for your clients and deliver so much more value.
Absolutely. I think it goes back to what you said earlier about the insanity. And that is, how can you possibly expect things to change in your firm if you're not willing to try something different? You
Yeah.
can't possibly expect that somehow magically it just transforms. And so that means all the way down to, what am I doing just prior to having this conversation with people?
Yeah.
As little as that may seem, it's changing up what you're doing now, experimenting with things, and borrow from people who've gone before you so that you can develop your own skills along the way.
Love it. Well, thank you, Dominique, so much for being here with us today on the Abundant Accountant podcast. It's always an honor to have you and so many golden nuggets. And it's just, it's a pleasure and looking forward to having you back again.
Thank you, Michelle. Now I've got to go off and prepare for a tax planning session. I've given myself 90 minutes today because
Wonderful.
I'm going to also eat while I'm doing that.
Awesome. Well, you go
Some habits
prepare.
die hard, right?
I know it is a hard habit to change, but I think if you can do it, anyone can do it. So thank you again for being here.
Thank you.
Thank you all so much for joining Dominique and I on another amazing episode here at the Abundant Accountant podcast. If you are an accounting, tax, or bookkeeping firm owner and you want to stop trading time for dollars and you want to let go of those overly demanding clients that are only giving you and only you're doing low value work for them, here's what I have for you. The Abundant Accountant empowers firm owners to have thriving practices. Through our sales training program, you'll gain the skills and strategies to command premium fees, know who your ideal clients are, and achieve the work-life balance you've always dreamt of. I show you a system on how to have clients value your time without having to discount fees, negotiate on price, and devalue your worth in a way that feels simple, effortless, and automatic. So you can work the hours you want to work while still having plenty of time for your family and your kiddos. If you want me to show you exactly how to do this, go to theabundantcall.com right now and book a call with me and my team. Once again, that's theabundantcall.com. Thank you so much for joining us, and we'll see you in the next episode.